Hello, everyone. Welcome to join this webinar. And I really appreciate that we have two very excellent guests, Romedi and Edwin here to share their knowledge and expertise on topics of real-world asset and tokenization. And let me first introduce who are our guests today. We have first is Edwin Matata. Is that correct, Matata?
Just one T, Mata.
Oh, sorry, Edwin Mata.
No worries.
Yeah, Edwin Mata. He is the CEO of Brikan. He is and also the co-founder of Brikan, a leading tokenization platform and a successful serial entrepreneur. As a blockchain lawyer, he combines legal and entrepreneurial expertise in Web3 ecosystem. Edwin also lectures at universities and business schools on blockchain, tokenization, and digital assets. He advises startups in Web3 space, leveraging his deep understanding of tokenization and real-world assets to drive innovation and growth in the digital finance industry. And then we have Romedi Ganzoni. He is the attorney at law and partner at MME. And he's a financial market law specialist, advising fintechs, banks, asset managers, and other regulated entities on legal and regulatory matters. His expertise covers traditional finance, digital finance, fintech, Web3, and ESG. And as a co-founder of successful startup, he blends entrepreneurial insights with legal knowledge. He is a sought-after speaker, regularly speaking at webinars, lectures, and articles, and is a frequent panelist at industry events and contributing to the financial and digital finance sectors. So I'm very happy to have those two guests with me today. And my name is Yasi, is the co-founder of Market, and it's a Web3 marketing agency. And I'm also the co-chair of Crypto Value Association Startup Working Group. And today's topic is mainly about tokenization. And we will give the panelists a list of questions at the beginning, and then we will leave the second part of the session for Q&A. So if you have any questions, feel free to write it in the chat box here. We will they will pick it up and answer those if it's relevant to what we talk about. Otherwise, we will open the floor to questions, and then those questions can be answered at the end. All right? So thank you so much, guys, for being here. And first, let me hand it over to Romedi. He will present on the topic of real-world asset tokenization.
Great. Thank you very much. Can you already see my screen?
Yes.
Awesome. So as introduced, I'm a lawyer at MME, and we always look at the tokenization of real-world assets from a legal and regulatory perspective. And I want to give you a brief overview of what it actually means to tokenize real-world assets and what the regulatory implications are. Because often tokenization is used very often without people even understanding what it actually means. So let me give you a short overview. So yeah, tokenized assets. I mean, we've seen everything being tokenized: watches, cars, oil, gold, real estate, literally everything. And some people even say that everything will be in the future also tokenized. So let's look at what tokenization actually means. So to tokenize stuff, of course, you need a token and you need a real world asset. And we say a right in real world asset because we will see in a second, it's not always the same that you get if you have a tokenized real world asset. And then, of course, you need something that ties the token and the right in this real world asset together. Because what you want to do is if you tokenize something, you want to have a situation where if you transfer the token, also the right in this real world asset is transferred to a new holder and not simply the token. If we look at the rights in the real world assets, I mean, the most common one, or what most people think about if they hear tokenization of real world assets, it's always the ownership or co-ownership in something. So for example, you have a diamond, you tokenize it, and always the holder of the token is also the owner of the diamond. And then co-ownership, that's more, for example, if you have things like bank precious metals, if you have a gold bar, you can share co-ownership of that gold bar. But it's not always ownership. So sometimes the token also gives you merely a claim to receive a certain quantity here now of bank precious metals. And especially with gold bars, for example, you can set it up in a way that you say, well, the holder of the token is always the owner of the gold bar, but you can also say, hey, the holder of the token has a right to receive a gold bar, but you don't know which one. And as we will see later, it's a big difference how you set it up. Then other rights that you can also tokenize is participation in revenues, usage rights, or shares of a company that holds the real world asset. That's used mainly if you want to tokenize real estate. So real estate is transferred by changing the land registry. You can issue as many tokens as you want, but as long as you don't change the land registry, the ownership in that land will not be transferred. So what you do is you have a company, an SPV in place. That SPV buys the land, is the owner of that land, and then, for example, the SPV can tokenize its shares. So the tokens would then be shares in the SPV, or the SPV can simply tokenize revenues. So if the real estate is rented out, then the revenues or parts of the revenues, they go to token holders. Or what we've also seen in the past is that you give usage rights, so that you tokenize indirectly this right to use, for example, a villa somewhere at the Lake of Como. And then if you hold the token, you can go once a year, you can go there on holidays. But as you see, tokenization doesn't always mean the same. So you should really read the token terms and see what it is exactly that you get. Only because somebody says, hey, we tokenize real estate, it's not actually ownership in the real estate that is tokenized. And these token terms, they're actually also this bond between the token and the right in the real world asset. If we look at the qualification of real world asset tokens, I mean, it's always relevant for the issuer, but also for the holders later. How does the token qualify? Because the qualification of the token brings about the regulation that is applicable afterwards. And FINMA has issued the guidance, the ICO guidelines already in 2018, where they made this distinguishment between payment tokens, asset tokens, and utility tokens, and then also hybrid tokens. And in the asset token sections, they mentioned that tokens which enable physical assets to be traded on the blockchain, they also qualify as asset tokens. So only based on this, you would assume, well, every asset token, real world asset token is also an asset token. And FINMA also said, well, asset tokens, they're treated as securities. And that would be a bit an issue because you don't want tokens to be a security, as we will see in a second. So it's not that easy. It's not only because something, a real world asset is tokenized, it's an asset token and it's a security. The things that are relevant when you decide, well, how does it actually qualify, which regulations do apply, you always have to look at that right that we said at the beginning. Is it ownership? Is it only a claim? And you also have to look at the purpose. So the tokenized rights, we looked at them already, like ownership, claim, participation in revenues, usage rights, and so forth. And with regard to the purpose, it's actually mainly important if it's rather a collector item that you tokenize, or if it's something that has more an investment purpose or a connection to capital markets, like, for example, gold bar would be more, would have a connection to the capital markets. And then, of course, last category here is the means of exchange. We have seen real world asset being tokenized, not for the purpose of actually holding or being owner of this real world asset, but the idea behind it was to tie the value of the token to a real world asset. So, for example, diamonds have been tokenized, gold has been tokenized, and the idea behind it is that the token is stable compared to the value of gold or to the value of diamonds. And that, yeah, if it's then more stable, it should be used as a means of exchange. if we look at the regulation, as I said, it's not that simple that you can say, well, real-world asset tokens are asset tokens, therefore securities. Still, security regulations, they always apply if you have a claim, so not ownership, but a claim to something. So for example, if you have a claim to receive 1 barrel of oil, that would be a security. If you have a claim to a revenue share, like the example with the real estate that you rent out and then distribute the revenues of the real estate to the token holders, that would also be a typical security. If you have a share, shares are of course securities. So these are the parts where the security regulations apply, and we will look at what that actually means on the next slide. Before that, maybe let's just go through the other regulations that could apply. So banking law is also something that can apply, for example, if you tokenize gold or other bank precious metals and you only have a claim to receive that, but you're not the owner of it, then the banking law would apply and you would need actually a banking license to issue that token. So you can already assume that that is not really something that is set up in that way. So because getting a banking license only to tokenize real world assets would be too expensive. AML, anti-money laundering laws, they're always applicable if the token that you issue should be used as a currency. So that's usually to stable coins. For example, if you, as I said at the beginning, if you tokenize gold or diamonds or whatever to make the price of the token stable, and the token should then be used as a means of payment, then AML will apply. You have to KYC everyone that buys the token and so forth. Lex Koller, that's the Swiss version of it, but if you tokenize real estate, you have in different jurisdictions different requirements for the holders of the real estate. So not everybody can hold, in Switzerland it's limited to residential property, but you cannot simply tokenize real or residential properties in Switzerland and then sell them on the open market, because people from abroad, from other jurisdictions, are not allowed to hold them or only under certain conditions. And the same is true in many other jurisdictions. So if you want to tokenize real estate, usually you have additional requirements to fulfill. And then sanctions, that's something that's forgotten often. Actually, in every business transaction, you would have to comply with sanctions, and many projects they forget that. So they sell their tokens to whomever. They have no idea to whom they sell it, and that's a risk. So if you sell it to someone that is on a sanction list, you may have an issue there. And let's look at the security regulations briefly, because just to make you understand what the issue is there. So security, if your token qualifies as a security, your real world asset token, and you sell it on the primary market, then you have to issue a prospectus. You know that from IPOs. So prospectus is a document that describes the product and all the risk that comes with it, and should inform the investor. And then also a key information document that's kind of the same, but way shorter, 3 pages, describes it so that everyone can understand it. This first part of security regulations is not such a big issue. Either you issue the prospectus and the key information document, or you can also make use of exemptions. So for example, if you sell securities of a value of below 8 million a year, you don't have to issue the prospectus, and there are other exemptions that could apply. The thing is, if you issue a security token, the secondary market will be very painful. So usually if you issue a token, you want it to be listed on the regular exchanges, Binance, Kraken, Coinbase, and so forth, but they don't hold the license to trade or to offer the marketplace for these. So they need a license as stock exchange, MTF, OTF, or DLT trading system. There is currently one or two applications pending for a DLT trading system, so I'm really curious to see when they will go live here in Switzerland. And the other thing is also, I mean, besides only the marketplace, also professional traders and financial service providers that provide their services regarding security tokens, they are also regulated. So in short, you should really tokenize, you should try to avoid the security qualification in any case. And that can be done by tokenizing ownership of a specific gold bar and not only a claim to a specific amount of gold, for example. And the last one, the VAT trap. Taxes apply to transfers in real world asset tokens, and the taxes that apply are always depending on what it is that is actually underlying the real world asset token. So, for example, if you tokenize diamonds and you sell the token, it's considered a sale of diamonds, and then usually VAT applies. So to avoid that, you can put the diamonds in a bonded warehouse, then it works without the tax. Or gold, for example, that's also a case where no VAT applies. That would be it from my side. And
Okay, thank you so much. We already saw quite a lot of questions popping up in the window. But before I jump into the questions, I would like to first invite Edwin to talk about tokenization platform. Then we can come back to your questions, okay, guys? So Edwin, so you guys run a tokenization platform. So from your personal experience, what are some of the challenges when it comes to make asset, make a digital twin of the asset on blockchain?
Absolutely. I wouldn't even know where to start because there's so many moving variables into tokenization. I think it's one of the hardest verticals out there because compliance, technology, then you have the economic side of things. I mean, you're actually bringing financial instruments and embedding it into a whole new technology. So just to speak about my journey, when I started in 2020, I come from studying tokenization in 2018. Saw a couple of projects out there where I got interested into the whole scope. There was a lot of uncertainty. For example, in Spain in 2018, they even had to issue a document saying that they were not so sure that they were securities, but it lied that it was securities, but best not to use them because, and it was very weird for a commissioner even to say like, I don't understand what this technology is doing, but they might be securities. So as the time and evolution happened, regulation started becoming more clear. Are we there at the perfect spot? No, but we have had a lot of advances. For example, even in some uh, countries, they using now the DLT, distributed layer technology. It's embedded in the regulation itself. So that's kind of like, it's a huge advance. It might sound like just three words, how different it is, but it's paving the way. So for us, the tokenizers platform, just having more detail that we don't have to always be there in the gray areas to, hey, we're doing everything by the book, but some other people saying, are you? It's kind of like always the confrontational point of view. So nowadays, that's why I think we're having more success, the tokenizers, me talking as part of that group, because what we have been stating for so many years is kind of like you can blend both things. Regulation can be technology, can be tokenized. Let's call it like that. So when you create a platform or you want to provide a software to a client, you have to understand that technology is not the only thing that makes it compliant. You actually maybe can fulfill 80% of the regulation with technology, but the remaining 20%, it's sometimes pure bureaucracy. It's documents, it's agreements, it's a white paper perspective that you have to submit. And that's why when you enter in the tokenization phase, you also need to go hand by hand with somebody that knows, could be in-house, or could be someone like Romedi here with MMM. I mean, you really need to understand that this is not just a random vertical that plug and play you right off the bat tokenize it. So the commitment that we tokenizer have to do has to be aiding in that compliance layer, be for KYCs, the whitelist transactions, understanding the movement of the money and all of that. So the client itself is compliant. But I think our main objective, which is just the technology and the usability, is providing a great user experience. If you provide a great user experience, it's easier for the client to onboard themselves in that tokenization layer. Because what I just said now could sound very scary, Romedi speech perfect, will sound very scary, but it's the reality, right? Because it's like regulation, but this has always been everything that is regulated. It's already scary by default. What we can do is approximate the know-how of people like him, the know-how of the technology, the know-how of the user experience, how we're onboarding people into the blockchain, and mix the three of mix the three. So it's a very hard journey for the tokenization platforms. So now it's kind of like we are moving all these variables and coding and modifying and updating. As regulation updates, we have to update ourselves. As more know-how gets penetrated, we have to update ourselves. As blockchain technology evolves in making it more user experience friendly for people who don't want to know about blockchain and all of that. So the journey itself is very hard, but we're getting there. Talking about when I started in 2018, I remember trying to participate in an STO. I never understood how to participate in the STO. Fine, I don't have the know-how of today, but at that time, I didn't even understand where my journey was. Like I had to go do so many things just to preemptively try to invest in an STO of, I think it was a commercial building out in Germany. So it was quite regulated. And it was like, oh, wow, I just want to invest it to test, but I'm out of this. And now we're seeing kind of like a more easier user journey where regulation is underlying, but you also don't have to be blocked by the regulation, where blockchain is being used, but you don't have to be blocked by the technology. So we're trying to give that opportunity that yes, financial instruments are definitely going to be embedded on chain. It's the future. Financial markets, I have no doubt they're going to end up running just because of efficiency and cost. And there's so many things. It's not just fractionalization. It's not just a lot of things. It's optimization. So we have to let them know that we as tokenizers can be compliant. Our clients can be compliant. Their users can enter into a compliant environment. Security, it's all over the place, and usability is also what has to be there. So sorry for my long answer, but it's just a long question.
Yeah. I know it's a very big question. So just like one question to you too, maybe make a quick summary before jumping to the questions is from your point of view, how would you name the top or the considerations that companies need to care about before they decide to tokenize anything? It can be from any aspect, because the reason why I asked this question, because when I talk to some of the clients in the past, they don't even know they need to talk to a blockchain lawyer. You see, there are things people just don't know they exist. So from your point of view, from either the technology side, the legal side, compliance side, setup side, what are the aspects people need to consider?
Yeah, I mean, if I was a company entering tokenization, I need to understand where I'm entering, right? What is the realm of reality that I'm about to engage? Is it I'm doing an initial public offering? I have to comply with the same boarding as if I was doing an initial public offering. So just because of you use technology doesn't mean that you switch or pivot your whole legality behind. So the same game you're trying to do or accomplish besides technology, you have to fulfill that. So it says you're doing I don't know, tokenizing equity of a private company in a private market. Maybe your first approach is to go to a corporate lawyer because those are the ones that are actually fulfilling that. Are you doing an initial public offering? Then maybe go to a securities lawyer. You want to embed that technology. Now blockchain lawyers themselves are very diverse in their know-how, but they also know where to pivot. So obviously having the validity behind and the security with a law firm or personal lawyer behind you, it's I wouldn't say it's a must, but it's considerably something that you may want to acknowledge. So legality, fine, but also to pinpoint, all companies should have access to lawyers because we all have various things that we have to worry. A pharmaceutical, they already have 1,000 lawyers, so it's kind of like just because you need a lawyer for tokenization doesn't mean that it switches your whole business idea. You probably already engaged with lawyers, even a capital increase. You're already engaged with a corporate lawyer. There's no fear when you go to the corporate lawyer and say, hey, I'm doing a capital increase, a Series A of 10 million. You're already preemptively hiring a lawyer. If you want to go for the same tokenization field as an alternative fund of finance, then you should always think about that. There shouldn't be added fear. That's what I want to get to. And then obviously you have the certainty. The next one is the weird one. If an issuer does not understand how to invest, then run away from such tokenization platform because you are pushing that possibility to your market, to your investors. So if you cannot fulfill the journey of understanding how it works, where the digital asset can be bought, how can I pass maybe my KYC, where can I transfer either euros or stable coins, if I don't understand any of that, then you who are pushing something into the market, then don't enter into tokenization. Either find somewhere where you can work or just stay away from it 100% because you are the one trying to get that into your market. So besides having great back from a legal service, I'm a strong believer of user experience, and I think it's drastic how much people forget that that's also a key denominator in tokenization.
Thank you. Anything from your side, Romedi, that you would like to add? What aspects should any issuer to take into consideration before issuing real-world assets tokens?
Yeah, no, I completely agree with Edwin. I mean, my advice would be if you go to a lawyer, go to a blockchain lawyer, because you can go to an experienced one, because the parts of corporate law and the financial market law is anyways covered by a blockchain lawyer. But the blockchain lawyer will have experience in setting it up, knows how to avoid regulation. And if you simply go to a regulatory lawyer, he will tell you, okay, it's a security, you have to comply with this and that. And if you have someone experienced in blockchain, he might find ways how you can actually avoid regulation. And I mean, the first question that the companies have to ask themselves, well, what is it that I want to tokenize? So which asset, how do I want to tokenize it? Ownership, claim, whatever. Who should be the buyer of it? Is it something that I want to offer only in Switzerland? Is it something that I want to offer worldwide? Is it something for accredited investors only? Should it be open to the retail market? And who will take care of the secondary market and of the liquidity? Because it's nice if you tokenize something and you find buyers, but they want to have a liquid asset in the end. And for this, you need a secondary market and probably also market makers. So that's something to have to consider, not only the issuance, but then the whole process of secondary market.
Yeah, we haven't covered that yet, the liquidity of real world assets, but maybe someone will bring it up later. But we have a few questions here I'd like to address. So Manuel said, I'm wondering about the tax implications of an NFT sale of a physical asset. Let's say you are tokenizing a real estate asset in planning that needs 20 million to build. You are selling NFTs and raise that amount. How do you properly navigate and optimize taxes in Switzerland and the buyers in Switzerland, EU, and RW? I don't know what does it represent for you.
Yeah, I mean, I'm not a tax lawyer, so big caveat here. And it depends a lot on how you tokenize it. So if you tokenize, for example, equity in a Swiss SPV that has this planned real estate, you may have you have taxes, especially if it's already 20 million. You have taxes that you have to pay at the beginning in setting up the company. Everything above 1 million you have to tax. And then afterwards, when you pay out dividends, especially in this part, Switzerland will probably not be the best option, because in Switzerland we have withholding tax. That means that if you pay out dividends, 35% of the dividends have to be paid to the tax authorities. And as a Swiss resident, you can get that back. You can, when you have in your tax statement that you own these shares in this company, you will receive them back. If you're a resident from abroad, you only receive something back if there is a double taxation treaty. And also there, sometimes you may not receive back the whole amount, but only 20% of the 35 and not 15. So that's why if we have real estate projects, sometimes it makes sense that we have everything in Switzerland, but then the actual company that holds the real estate is, for example, based in Liechtenstein, where they don't have a withholding tax. But it really depends on the setup.
Okay.
Yeah, I would like to add something to him. Notice how he never mentioned anything regarding the NFT and went to the consideration of the asset. And that's super important because we sometimes think like, oh, because it's an NFT, it's tradable or it has a different tax implication. And he was going to the source, which is how you treating the real estate, who's the owner, Where are the UBO? Where is the state and everything? Because that's the answer. I mean, that's what I really want to communicate. It's always here. The answer is not in the technology. It's how you are first performing the essence, an asset, a hard asset. Is it equity? Is it debt? Is it real estate? Is it? That's where you have to go look for the answer. Technology is how it is transmitted and transported, but it's not the added layer that it changes the whole taxation field of everything. So that's super crucial for me. Just
Yeah.
And the
So
fourth,
can I just add maybe one sentence? I mean, from a Swiss perspective, the technology is actually, you can forget about the technology, how it's transferred or not. It doesn't make a difference, as Edwin said. In other countries, they're not so far yet. I just read recently that in Italy, for example, they are considering NFTs own assets that are to be treated differently. But probably sooner or later, they will find out that doesn't make much sense, because then you can simply put something in an NFT and have make tax optimizations which are actually not fair in the end.
thank you. Let's move on to the next question. I hope that answer your question, Manuel. What about DAO membership? Is that considered the equivalent of a share? I think it's a very good question. What do you guys think?
Should I? Because DAOs are, yeah, I mean, DAOs. You have many different ways of how you can structure a DAO. You can either just sell tokens. DAO participants, they hold tokens and they can vote on specific tokens. Maybe they even have a treasury to distribute and so forth. But you can also wrap a DAO into a legal entity like an association. You could also make a DAO actually a company limited by shares, tokenize the shares. So there isn't really an answer to this question. If you tokenize the shares and say this is my DAO now, because you can transfer this participation right with the token, then it's simply a normal share. If there is no entity, if the DAO is not wrapped into an entity, then it might qualify as a simple partnership. That's a case by case assessment they have to look at. But usually we do not recommend to have unwrapped DAOs, simple partnerships. They have liability issues for token holders. So usually we wrap the DAO into association, foundation, whatever.
Can you elaborate a little bit more what do you mean by wrapped DAO as association and foundation?
You can set it up, for example, a DAO that the token holders are then members of the association. So instead of having physical general assembly, you would then simply vote via token voting. But there is really tons. You can play around with these structures. You can, for example, also have an association that has a normal general assembly, but then in addition, it also has a DAO, and that DAO is like an organ of that association. And you can give them, I don't know, voting rights, certain topics. You can play around with it.
Oh, okay. Next question. Edwin, do you have anything to add, or we move to the next
yeah,
one?
that I think that the DAO as people think exists, it does not exist because at the end, the nature of the legality of the link between the people is through something that people understand. Is it a corporation? Is it an association? Is it a partnership? And just to that on that, what we were talking about, for example, in Florida, I think 2 years ago there was a lawsuit against a famous DAO, and they went for the token holders. And they were like, no, I'm a part of a DAO. And the judge was like, so you're a partnership and your liability is fully responsible against all your holdings because you don't have the legal entity protecting you with limited liability. So I think the concept of the DAO was, it's a more of a marketing concept. But when you enter into the realm of, hey, how do I do this without me getting affected with my wealth or my decisions or blocked through a limited liability company, that is why you have to do it with a graph, which in the end, a DAO is the technology, but it mimics what we already know. Is it a corporation? Is it an association? Is there even bylaws that they call it? Yeah, you can code those. So the answer is always kind of like you always need to focus on what you're doing by analogy and setting that up because in the end, whatever you want to say, oh, we're DAO, we're decentralized, nobody knows who we are. The reality is when there's a problem, the only thing that matters is the judge saying, hey, I don't understand. So I'm gonna put you under this column, and I'm gonna say you are that.
Yeah, so actually for token holders, they also need to pay attention to this DAO if they're part of it, right? Let's
Yeah,
move
I mean, usually, for token holders like you and me, it's probably not such a big deal. But if you want to have the big VCs, institutional investors, I mean, the judge will not go after us. Or I don't know how your bank account looks, but they will not come after me, but they will go after the big VCs because that's the place where they can get the money. And if you want to have a successful DAO at some point, you need to have the big players on board. So you should give them the comfort that they need.
Okay, understand. Yeah. I have another question from Ron. He asked, can we discuss the concept of validator or real-world asset administration, management, distribution, resale, and the servicing, and how that gets fitted into this real-world asset, even in assets that are begin such as art, or benign, such as art, precious metals, collectibles, etc.
I'm not sure if I understand the question correctly, but maybe you have a DAO, you tokenize an asset, and let's say you tokenize a Picasso because he wrote art. That Picasso has to be somewhere in a warehouse, and so the custodian of the art would then be instructed by every token transfer that he holds the art now for the new token holder. So usually it's the company that issues the token. They take care of custody. Either they do it themselves or they have a professional custodian that does it for them, and insurance, and yeah, the resell, servicing, and everything. You can govern it in the token terms. For example, you can say, well, if more than 70% decide that we want to sell the Picasso now because the value went up, you can actually govern that in the terms and conditions of the real world asset token.
I have a follow-up question about this for Edwin. So from your tokenization platform design, how can you make sure that, okay, this custodian part, the validator part, as Ron asked, is embedded into the process, into issuance process?
Yeah, so with that, we're testing some technologies called proof of reserves, where you have to really embed in the code where I don't know, the custodian is. So for example, if it's the Picasso in the Swiss vault, you have to get the audit or expert creator establishing certain terms, and you can embed those. But even if you go all the way to that, the foundation of every single business in we do is trust. Because right now I can tell you I own a Picasso, please send money to this Ivan, and you can still send it. And maybe I don't even own the Picasso. So what I'm saying is, even the technology, we're never gonna be 100% certain with certain things, especially with physical assets, because the physical asset is still embedded on the physical world, and the technology world will never be interconnected because it doesn't work like that. It's not the same as embedding something already digital. So for example, equity doesn't have weight. It can be easier to embed. For example, locks, you can create already companies fully on chain. There's other countries trying to mimic that. So that already kind of like pre-existing establishes how it works. But when you have a physical asset, there's a discordance. So you create kind of like the digital twin, or how it has to be embedded with one thing, but it's not as optimal. Because for example, in this custodian, what happens if the piece of art moves from Switzerland to the custodian in Norway and it gets lost in the way? How do you tell all token holders about that? And that creates kind of like those scenarios where you have to preemptively say, hey, the value has dropped because the art got robbed, or something happened with it. So it's not as clean. And this is kind of like the whole problem with technology embedding things on chain when they're already physical hard assets. So I'm not saying that they shouldn't be tokenized. There's a lot of good things about it. Well, for me, that I think that the tokenization at its best possibility is with those assets or financial instruments that don't have a body. Like debt, it's a contract, it doesn't have a body. It can be created online. Equity, the same. But when playing with other assets, there's a lot of things that can just add more problems to it.
What are some of the solutions then to address this if people tokenize real world assets that is tangible, but they need to have, control or at least some transparency knowledge about what's the condition of it, where is it, how it is, where is it stored? What are some of the solutions there for people to token holders to have like a control over it?
Yeah, I would like to jump here first, just because of what we recommend to our clients, and it's how would you do that without technology? You will set up a company, have a management, I don't know, board of directors and shareholders, and then through that you will understand how to manage the Picasso, right, or the real estate building worth 20 million. I think that we're trying to invent something that has not worked, and so we have corporations for hundreds of years, right? And that's the reason for it. They've been optimizing vehicles for management of assets, wealth, and whatnot. So just the fact that we are adding technology, we should not break the bounds of what has been done for a specific reason. With that, what I'm saying is don't think about the asset. Think about how you're going to structure the management of the asset. If you want to tokenize 20 million, don't think about bringing 20 million people with €1 and you have a partnership of 20 million people. What you will do is what every single corporate or wealth or asset manager will do. Create a structure where the asset belongs to, it's in the accounting books, it's part of the company, then tokenize the equity or tokenize the debt because you want to buy the building. So focus on what structure you already can use without technology, what financial instrument has already been done, and then technology comes second because your business is not technology. You're not selling technology. What you're selling is either, okay, come into my company because you're going to have dividends. Come to my company because you're going to have from this debt interest. So that's how we're going to make the business. The underlying, it's always the profit. How am I going to generate profit for you? But it's not about the asset per se.
Right. Right. So basically, people need to take a step back, look at how it's going to be done, like in the real world, and then configure it in a way that is compatible with the digital world. Do you
Yeah, I
have?
mean, the only if I can just jump in, you have, as Edwin said, I mean, you have to do everything the same way as you did it until now. If you wanted to have, let's say, co-ownership or co-shareholdership, you had to do the same things. Take care of insurance, take care of custody and everything, manage your shareholders or stakeholders. The only thing that's different now, if you tokenize them, you have to find a link from the real world into the digital world to the blockchain. So you need somehow an oracle that says, well, I have received now this painting, and therefore I'm issuing the tokens. So
Okay, all right. And I hope this answer this question is answered. Let's move on to the next question. It's can overseas company issue a DLT security in Switzerland?
yeah, well, the law has changed. So we are able now to issue securities. Back in the days, you could only issue them in the form of certificates, so pieces of paper where it said share number 7 of company X. And then at some point they said, well, there are also uncertificated securities, and there you didn't have a certificate at all. You simply had, for example, the company that had the share registry, and that would then mean that you own the security. That's uncertificated security. And now they created this ledger-based security, so you can issue tokens, and these tokens, they reflect the share. And also here again, it's about the token terms that define one token is one share, for example. And you can tokenize securities from other jurisdictions, but you're limited when it comes to equity. Because equity, usually the other jurisdictions, they usually have rules how equity can be put into a certificate. And if they say, well, you can issue a certificate that reflects the share, doesn't mean that you can also issue a token under Swiss law. So equity is tricky, but debt. So if you say, well, you tokenize the revenues from that part, then it's not a problem. And if you tokenize ownership, so a company from Germany can have gold bars that they want to tokenize, and they can put that under Swiss law. So that's possible.
Okay. I have another question from the audience. Maybe it's very straightforward for you guys. What happens if I lose the private key of my wallet that holds the token? What if I send it to the wrong address by accident?
Should I? Do you want, Edwin?
Yeah, I'm gonna be the
Maybe I
bad
can
guy
say,
here. It's like,
you start how you do,
I'm
and then
sorry.
I say how it should be.
Unfortunately, you cannot do anything. There's right now there's what I want to bring more about what is being built, because right now when you lose your private seed or your private key, it cannot be recovered. It will take you millions of years to even try to break the wallet because of where we are right now. And if you send the wrong transactions, there are contracts now where you can recover, but it depends. If it's like a stable coin, USDC, USDT, impossible. But now, for example, in security tokenization, there's claiming back functions that you can push back the transaction if such occurs. So from a technology point of view, there are contracts out there that you can claim back certain transactions, but that's very used for very specific cases, all right? But luckily for the state of the art right now, it's we're as in we're in this side, but I'm not a wallet creator. Now creating a more advanced wallets where you can store private keys inside an email to evade kind of like the loss of the C phrase, because it's quite complex. Not a lot of people know how to write 24 words in a paper, or this gets distributed somewhere. I mean, if people lose passwords every day on absolutely everything, right? But luckily for everyone now, there's been advances, because this is kind of like a huge barrier. All right, even for me, you have no idea how sweaty I get when I have to do a transaction on blockchain and I'm in the blockchain. I review, copy paste 100 times, because if you don't do it correctly, you lose it. So me in this field, I understand that, but luckily for everybody, there's been a great advances in wallet management that I have no doubt in the future we're just gonna have a nice goal signing, and don't forget that everything. And with the transactions verifications, there's a lot of now MetaMask is pushing you, hey, review the transaction. There are other software out there that is kind of like, hey, are you sure it's this one? Aren't you sure? And then kind of like reviewing and everything. But in the end, it's unfortunately it's not like the bank transfer. But even in the bank, you have problems. I sent one transaction wrongly to a bank when I was like, I don't know, like 3 years ago, and it took me a long time to recover my money, because I had to say like, no, it was wrong. I made a mistake. So it was not even that simple. But at least I got it back. But in blockchain, that transaction is it's unfortunately lost.
Yeah. When it comes to shares, for example, you have the possibility to declare them invalid, but you have to go to the court. You have to make your case that the token has really been lost, that you have been holding the token before it has been lost. So there are possibilities how to structure it, but it is a very burdensome process.
You mean when it comes to security tokens?
Yeah. Yeah, if it, I mean, and also you can foresee in the terms, for example, if you tokenize gold or ownership in a gold bar, we have also foreseen sometimes, in the terms and conditions that users who lose their tokens, that they can also go to the issuer, make a case that they have lost it, and then, for example, you can publish, hey, these tokens are claimed that they have been lost. If no one challenges it over a certain period of time, new tokens will be issued. But it's always a bit a question. Do you want to be extremely decentralized and say, hey, there should be no one who can issue additional tokens, or say, hey, this token is invalid? Then you will go the other route. And if you say, hey, it's more important that people, if they lose the tokens, still get access to their assets, then you go the route that I just explained. But that's a bit question of how decentralized that you want to be.
Yeah. So in summary, basically, you are not going to get your asset back when you lose the private key. So but there are ways nowadays with the updated technology and the legal ways, or you can claim it from token issuer. Maybe there's a possibility you can get it back. So just make sure that you have your private key safe and don't lose it.
And you have to kind of decide which route you want to go. Do you want to give them the possibility or not?
Yeah,
Because
as an issuer.
decentralization maxis will not be very happy with you issuing new tokens.
Yeah, correct. We have a question from Henry. It's a little bit long. Let me read it. Thanks for hosting such an insightful session. Okay, in my opinion, SSI and especially a globally recognized digital identity that is linked to the digital wallet of an individual/organization is required to help compliance, regulatory, and taxes to be applied correctly to tokenized assets as they are transferred either peer-to-peer, C2B, or B2B. Yeah, what's your opinion on this?
Yeah, I mean, it definitely helps if you have a self-sovereign identity and are not reliant on a trusted party to hold your data, and it helps to fulfill compliance regulatory requirements. So you could, for example, if you have information of the token holders, you could, for example, say, as I mentioned in the example with the real estate, if you know, hey, only Swiss, or at least 70% of the token holders should be Swiss, you could have a setup in place where you allow only transactions until the 30% of foreign nationals is reached, and after that the transaction would fail, for example. So yeah, it's definitely something that could help.
Edwin, do you have any comments on this digital?
Oh, wow. Yeah, I could go here hours because it's one of those things that I'm not so sure that it's completely how it is sold. First, with SSI, we don't even know who's gonna be the validator. We know the European with IDAS2 is gonna come up with how kind of like that happen, but what about the private entities? And if it's a private entity supplying you with the SSI, where is it supplying it to? Who's gonna validate that? Who's gonna set that information? Who's gonna set that KYC? So we have into the second layer, I accept the SSI, and then the bank, I don't know, the commissioner of security of money laundering of a given country requests me information. I cannot just say, hey, it's an SSI, I don't have the information. They will be like, yeah, but you're doing transactions with securities, so I need information of this user. And then I was like, oh, I don't have the KYC. There's so many questions around SSI from my perspective, personal, of course, that I think it's not as clean as people think. Just because you have a self-sovereign identity does not mean that, first of all, you're going to get accepted by all private entities, that such private entities, if they get required to get information around you, who are they going to supply? The transactions that you can make just because you have it under an SSI doesn't mean that now they're valid. I mean, with an SSI, you can still perform transactions on Tornado Cash. So does make that SSI completely invalid and illegal? There's so many variables there that my personal perspective, and I don't want to be a hater on the team. It's just that it's more pure, it's more idealistic than what we wanna that it's actually gonna be working, at least for the foreseeable time.
Actually, this question is linked to the next one because we talk about to have a digital identity, then linked to a wallet. Then when you buy and sell tokenized assets, these kind of fulfill the regulatory requirement. But on the other hand, asked by Gazi that are token holders comfortable having all their transactions and balances visible to anyone on public blockchain?
Some are, some aren't. And yeah, I mean, you can say it's not public, it's pseudonymous, but still, I mean, with the chain analysis tools, often you can find out a lot of information. That was also the reason why they introduced mixers. Now, unfortunately, we cannot use them anymore because then our funds will be tainted. It is a problem, and that's maybe also why the reason why probably the next, or that's just my opinion, but I think the next big blockchain star will be one that includes privacy preserving measures such as ZK knowledge proofs.
I think
Absolutely.
ZK knowledge proof is a hot topic nowadays. Yeah, we have a new question popping up by Sebastian. We still have a couple minutes here. He asked, private assets, private equity, real estate, etc., have demonstrated superior alpha performance to public over decades on the back of better governance and well-managed agency issues when the shareholders are more concentrated and qualified. If tokenization brings more liquidity, for example, broader investor base, doesn't it create agency issues that could deter the performance of the asset class? Are you aware of any study solutions to tackle this issue?
I love that
Edwin,
question. It's super
you want-
educated. I want to know who Sebastian is. Please send me a message because that's like he must be an asset manager. So no, on my perspective, all right. We shouldn't think one completely changing the other one. It's an added layer. Both can coexist. It's a new form. So you can mix offline with online in forms of capitalization. You can open just to qualified investors and maybe give a chunk to retail. This is a new game where you just want to have different paths, right? Of finance, of management, and anything. But we should never think that just because you choose a certain path, you neglect absolutely everything else. So the performance of the asset itself does not rely on the investor, but maybe it could because he could be thinking, you know, I have now 1,000 investors who I don't know how they're controlled versus just little volume of 5 family offices who I know they're my LPs and that's the management and they know how the asset performs and they're not gonna sell cheap or whatever. So yes, but that's what I'm like. I really struggle with my clients sometimes for them to comprehend that really the game here is not changing absolutely everything. It's just a new added layer that can coexist with your pre-existing forms of management, of capitalization, just to leverage that technology and slowly start pivoting. But there's going to be a point where this question is probably in the form of tokenization. You can really have just a few LPs, not just because they tell you, oh, 100 euros for real estate on tokenization. Yeah, but you can sell a token for €1 million if you want it. So I think the broad sense here is kind of like just understanding that now with this technology you have an added layer that can benefit you or not. But that's kind of like let's not change the whole spectrum. It's just an evolution. It's not a revolution. We're not gonna absolutely change everything. We're just updating a legacy system with technology.
Mm. Do you have anything to add, Romedi, or shall I move on to the next question?
I think he summarized very well. The only risk that I see a bit, also if I read this question, is if you only have sales to a public crowd that doesn't have any idea about the asset, then I agree that it might be more risky than if you have few venture capital firms that really do their due diligence and thoroughly assess the whole company before they buy into something. But as Edwin said, I mean, it's not that you do one or the other, but you can combine it. You could, for example, do an investor round with the big VCs, but then at the same time also allow the public to join in.
Okay.
But yeah, always watch out in what you invest.
If you have a couple more minutes, then we can take the last question from Brian. Basically, it's related to the digital identity question. Is that okay? Just a couple more minutes. So he asked that, yeah, he agreed with Edwin that SSI being incomplete. So he thinks that you still need a trust registry or credential issuer authority that the ecosystem, lawyers, government, etc., agrees as being valid. So do you see a play with verifiable credentials for trust registries seeing better adoption, which gets us closer to some of the notions of SSI?
Yeah, so here it goes against probably the theory that decentralization is non-governmental, like self-govern and kind of like this, which is it's a nice idea, but there's certain things that I think we should still trust the main foundations of the state, and with identity is, I think that the registries of who has been governing our identities, our birth certificates, our marital status, our university diplomas, I mean, there's some registry that I think it's best for the everyone to be held by public entities. Because let's put an example that you go with a private entity. With a private entity, there's so many, yeah, you can audit them and everything, but a private entity can be incentivized by money transfer. So you never know if you can actually start buying your own identities and then create everything. Because if we go and privatize certain factors that are, I mean, there's more uncertainty. I rather trust, and me as a lawyer, I was specialized in identities and electronic signatures with AIDA. So I saw a lot of this that you have to create even centralized certificate authorities for the issuance of certificates to be able to say that person online was that. And I struggle to believe that private entities were better than public entities. They are faster, but faster does not mean good. So when you put to the perspective that you have in front of you a passport issued by a state, country, and an identity on a phone issue by, I'm gonna make it a stupid example for say Facebook. I don't know who you're gonna trust, but I know who I am gonna trust. So I do believe that centralized authorities in certain cases are a must.
Thank you so much. Yeah, we didn't know that you have the background, especially in this domain in the past. Great. So I don't know if there are other questions from the audience. There are several requests of Romedi that if you can share the slides with the audience.
Sure.
Okay,
I will
then.
send it to you and then you can distribute it.
Okay, sure. And then we'll try to, for those of you who have registered, I think we can find out a way to send out to everyone. So thank you guys so much for attending this webinar. And thank you so much, Romedi and Edwin, your attendance and giving out so much experience and knowledge to our Crypto Valley Association members, and really appreciate your time.
Thanks a lot.
Thank you very much.
Have a nice evening.
It was very nice. Yes.
Bye.
Bye-bye, everyone. Bye-bye.
Bye.